Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive 2026. Okay, today, August is dying. Last week of August, summer's over. Okay, very, very quiet day. Today is Monday, August the 24th. Picture of this S&P 500. But despite the very quiet nature of today, Bessent came out and had a speech, and maybe we have a war pivot going on in the States. Okay, it's a quiet day, but I think this has some lasting implications, okay, especially for one of the trades that we are in. So we'll talk about what I think is going forward with a war pivot in Bessent's speech today. First, let's talk about the technical picture. Guys, it's still bullish. We are above the previous highs. Let's bring in the moving averages above the 50. That's all I care about. It's still bullish. So we don't have to go much more into this depth. We might get our wish. It might probably go and retest the highs here because, it looks like it's going to do it. Maybe even undercut. Who knows, okay? So let's see what the sentiment has to say. Basically neutral to greed. It's pretty up there, okay? Even though the momentum is at fear, the breadth is coming back. The pit call ratios, I suspect a lot of calls are being bought, bringing this, a bit higher. But it remains to be seen. I still like the fact that we are relatively negative at the highs. Okay, so this is a bullish setup, although I do think we continue to go lower. Okay, and I will make a caveat that we're going into September and October, okay, which tend to be very bad months. So, all else being equal, of course, seasonality. I'm not really a big proponent of seasonality, but if everything stays the same, we might get some kind of weakness going into September and October. I'm not 100% sure of that because everything seems to be okay here. But you have to be aware of that seasonality. We will be adding some short exposure. We always have some short exposure in case the market tanks as a mini hedge. And it doesn't cost us a lot. Okay, so you should have some kind of short exposure, although we are net long by far. Okay, and we're going with a bullish thesis. Okay, so let's get to the big news, the war pivot. Okay, what do I mean by that? Okay, so today, the Trump administration unveils anti-Iran global sanctions plan. Remember sanctions, guys, back in Russia? How did that turn out when they sanctioned Russia? What happened to our trades? Okay, and it signals that China is not exempt. Okay, so Bessent had a speech here. I won't play it for you guys, but he didn't look very confident, okay? And basically the Trump administration here unveiled the plan to isolate Iran's economy by threatening to impose secondary sanctions on Iran's enablers. Okay, what does he mean by that? Okay, he's calling it the Operation Economic Outcast. So is he switching from a hot war into a cold war? I suspect he's trying to back out of this war and yet still seem tough by putting economic sanctions while withdrawing the hot military engagement of this war. Okay, so he's trying to back out without backing out. So basically he's trying to sanction the enablers like China specifically, okay, because whoever helps Iran in their war, he's going to sanction. Okay, so this is the perfect playbook for our trades. Okay, so it's going to be another sanctioned release. Scott Bessent says we are launching an economic onslaught against Iran's financial connections around the globe, blah, blah, blah. Okay. So this is a big deal. He goes, China isn't exempted. We're going to call it, he calls it an economic D-Day. Okay, these guys with their exaggerations. Okay. So this is another attack on China, on Russia, on all of the, the BRICS nations, just like they did with Russia, when they froze their dollar deposits. So they're going to freeze the deposits of the enablers of Iran. This is great. Okay, great for our trades. Okay, now before we jump into the big trades, what does this do for oil? Okay, let's go step by step. Oil down a bit today, but still going to be elevated. Okay, if he backs out from the war militarily but keeps on sanctions, oil should go down. Okay, because maybe the Strait of Hormuz might be open a little bit, or they're finding some mitigating factors around it. So maybe oil stays like this for a long time, between these levels, between 80 and 85 for a long time. Okay, that is something that you have to be wary of as an oil short. I'm an oil short. Let's see how that plays out. At 80, one of my shorts wins, the other loses. Okay, if it sticks around 80, we'll see. Okay, it's very, very on the table. I just think that oil sort of goes nowhere as this economic sanctions plan goes and drifts lower over time because there will be workarounds from the Strait of Hormuz. Okay, what about rates? This is the big thing, the U.S. 10-year. Okay, no, this is the 1-year U.S. 10-year. Yeah, still at the highs. It's not buying it yet. It doesn't think so. We're at these critical levels. And Bessent, that's why Bessent was nervous. He wants to get this guy down. Okay, they might have to say we're going to he might have to be explicit, Trump that is, in saying that we're going to back off militarily. Okay, no military pressure. The Strait of Hormuz is open. Just economics pressure. If he makes that a little bit more clear, I think the yields come down. Okay, but as so far, we're not sure. And you can see from the TLT, it's still hovering at the lows. This 80.85 level is historical lows, okay, which means we're at historical highs in terms of the 20-year bond yield. Okay, so it's still not buying it. Okay, so we have oil still not buying it. We have rates still not buying it. But what is buying it? My favorite trade, gold, ripping. Why? Okay, because this is a repeat of the Ukrainian war. Okay, what happened? They froze Russia's dollar assets, so they all started buying gold. The BRICS started buying gold. Russia started buying gold. China started buying gold. Iran started buying gold. Everybody in the BRICS nations started buying gold because they're going to drift away from the dollar system. This is even more proof that is true. That it's, it's like Bayesian statistics. Like you posit a theory, and then if the results down the line happen as if your theory is true, then your theory is probably true. Okay, so the theory is that the BRICS are going to de-dollarize, if you will, not just get out of the dollar, but less of their holdings in their central banks will be in dollars and more will be in gold. So this is why gold is catching a rip. This is not just because of the the Treasury buying long bonds, like from 5 billion to 10 billion. This is more than that. This is not just quiet yield curve control, if you will, or proto yield curve control. The very beginnings of yield curve control are in place in the States. We know that, but this is beyond that. This is the sanctions. The sanctions could have happened. This is a 1-2 punch for gold. Okay, you have the interference into the market, which is pseudo or beginning yield curve control. Plus, you have the sanctions, which is a replay of the Ukrainian war for the BRICS, so they will start buying gold hand over fist again. Okay, and if you can see here on gold, we are not even overbought yet. However, let's go back to the moving averages. On Friday, we closed above the 200, so now we're bullish gold. Okay, here everybody hated it. The chart looked terrible. Nobody wanted anything into it. Boom, above the 200. Now people are starting to look. Now they're bullish. Now they want to buy. Okay, they probably sold here and bought it back here. Okay, they sold at 4,300. They bought it back on Friday at 4,600. Okay, so they avoided this, but they lost on this buy and sell transaction. Okay, so gold is looking okay, still bullish. I still like it a lot. I don't know where it goes before it corrects. Okay, but this is a double shot of nitroglycerin for gold. Okay, and for silver, not as much because central banks don't really buy it, but silver will catch a bit in a lagging fashion. Gold will rip. And then the retail will start buying silver because it's poor man's gold. It's going to be a lag for silver. As you can see, it's not as good as the gold chart. I like gold better. I have more of my holdings in gold than I do in silver because of that fact. Okay, so gold is really, really benefiting from this, whereas the U.S. 10-year, still at the Rubicon, still at that 4.73 line. Okay, and if we get to the 5, it'll be hairy. Okay, I don't think it happens. I think they really pivot before that. And U.S. oil, I think they do the same thing with U.S. oil, as mentioned before. It might stay here and drift lower as the hot war starts backing off. Okay, so that's it for that, guys. And what I think happens to the war pivot. Let's look at another asset, Bitcoin. Okay, Bitcoin ripped on this news. All of a sudden, remember the correlations? We said the correlations have shifted. Now Bitcoin was going up as the market was weak. It's usually a pro-cyclical asset, but no, not this time. It's counter-cyclical. However, I'm not convinced that it's back. Okay, let's bring in the RSI, the technicals. Very overbought, and approaching this resistance level of 80K, around 80, 81K. I suspect Bitcoin goes down. Now, does it go down, form a higher low, go up? I don't know. I just don't like, I think this is a weak asset, generally speaking. Okay. So right now, even if you're long here, I would take some profits because I don't like the technical picture. I think it's going to go lower first. Okay. So that's my take on Bitcoin. And to finish it off, what are we going to do this week? Well, we're going to play some earnings. And the stock that has earnings is NVDA. NVIDIA down today. It's trading around 208, 208.50. They have earnings coming up on Wednesday. Okay, and I want to play it. Okay, I entered a trade today on NVIDIA options trade. I did a put calendar. Okay, we did it at $210. Okay, what I did was the August 28th put I sold, and I bought 210 level, and I bought the August 31st put. Okay, this is going to take advantage of a huge volatility crush. The difference in volatility of these two options is the August 28th option is at 73% volatility, and the August 31st option is at 58% volatility. However, it's much less than that. Like the period between, because like August 28th comes in 4 days or 3 days, and August 31st comes in 7. Okay, so between this day, between Wednesday and Friday, because 28th is Wednesday, 31st is Friday, it's a couple of days, 2-3 days difference. Okay, so that volatility is going to crush. In those last 2 days, it's going to be really, really low. You're going to have a volatility crush. Okay, and I don't know if you look at the chart on NVIDIA and how it's behaving in the past. I don't think it's going to have as huge of a reaction to earnings as it has in the past, even if it beats. Okay, and because we've seen before that other companies that have beat on earnings have tanked afterwards. Okay, but I don't think it tanks because if it's already going down. So it all depends on what the SMH does, right? If you look at the SMH, it's in a no man's land. Okay, it went up, it went down first, a big down move, up move, and now we don't know. Is it going to form a higher low before going higher, or it's going to continue to go lower? It's in no man's land. So neutral on this asset. If it forms a higher low to go higher, great. Okay, but we don't know that. Okay, and so we are basically neutral on what happens to NVIDIA. And NVIDIA goes with semiconductors. So how do you play it? Like we said here, we're neutral. We know that it's very, very elevated. So what we do is we're playing here, we're just playing the volatility crush. Okay, and we don't think that it's going to be a big move either way. So we're taking it. We're taking the trade. We got in at $30, which is 30 cents per spread. And the profit, if it stays flat, is almost 9. What is it? Over 10 to 1 potential profit. Okay, 10 to 1 return with a 70% chance of profit. But that's going to change this is probably around 50 after the volatility crush. Okay, so what I'm trying to say is that we're just playing the volatility crush here. I have no sense of where it's going to go, and I think the risk reward is worth it. And I only did, because it's on Wednesday and it's Monday today, I only did 1/3 of my allocation. I will do another third and another third going into it. Okay, maybe even do just 2/3 on the Wednesday. Okay, right before, maybe around between 3 and 4 o'clock. Okay, I might enter the other part of the trade. I just wanted to be in it because I like the risk reward here. Okay, and it's just a small 1/3 of a total position. So I like the fact that NVIDIA is really, really pricing these options rich, and I want to take advantage of that vol crush after earnings. Okay, so that's it, guys. Let's reiterate. SPY, war pivot. Okay, war's pivoted. You're going into sanctions. I think they want to back off from the hot war into a cold war, maybe. Okay, what are the implications? U.S. oil, we expect to stay high, elevated, although drift lower over time. Okay, the U.S. 10-year, to be determined, question mark. I think because it's so high, they will do more interference. They will do something to try to get it down, because this is going to destroy them in the midterms. Okay, and the asset that benefits from all this, from sanctions, gold. Okay, sanctioning the BRICS, good luck. Okay, it didn't work with Russia, it's not going to work again. Okay, but they keep repeating the same mistakes. Governments just keep doing the same thing over. It's the most predictable trade ever, is to fade government, and that's why we want to be long gold. Okay, so that's it. Bitcoin, sell here. I'm not really comfortable. Very, very overbought. I think this trade is not going to have legs. Okay, I'm not super happy. I'm not super elated. I'm not super bullish with Bitcoin anymore. Okay, so that's it. And of course, NVIDIA, we don't know yet. I'm neutral on the outcome of the earnings report, and I'm playing it accordingly. All right, guys. So let's see what happens. Earnings coming up the last week of summer. All right. Hope you guys are enjoying it. I am. All right. Laters.